get a big fun view. Prashant Paroda is with us, Portfolio Manager, Emerging Markets, Allspring Global Investments. Prashant, good to have you with us here. Good morning. Thanks for your time. So a lot has gone on, but let's take it from where we are now. I mean, the state of play as things stand right now. What is risk reward looking to you for equities and specifically with regards to India, Prashant?
So I think the Indian market has recovered quite a bit since April, and we're seeing activity in some of the sectors such as financials, some telecom and materials continue to do well. And it's a game of expectations where if companies meet or beat expectations, your valuations continue to be rewarded. You get rewarded for that. But if in case you have high expectations and you miss in such as in some of the new age sectors, you get penalized for that. So I think India is this year at least, we see sort of an expectations-driven market. But it's good to see flows coming back from FIIs. And I think overall we're pretty positive with inflation coming down. Hopefully consumption will pick up towards the second half of the year.
Prashant, any sectors or spaces you're excited about? Because, I mean, generally, across the board, I mean, it's people are struggling for ideas. Yeah, I mean, there are long-term stories you can bet on and stay invested. But with the snapback we've seen from the lows, at least on a general basis, there always will be a stock here and there. What do you like, Prashant?
Yeah, so incrementally, I think private sector banks, we continue to be bullish because they haven't worked from a 3 to 4 year perspective. So some of them, credit growth is pretty good. Credit costs are also pretty much in line, in check. And as sort of there's monetary easing, some of the credit growth might pick up. Then on top of that, beyond that, we also have exposure to the telecom sector, which is, you can call it a 2.5 player, where, the two players are essentially winning market share versus the other. So India is a pretty unique market. There's some spaces where there's just two players. In cement also, you can argue that the larger players will continue to do well because their cost structure is a lot better than the smaller players, and they'll continue to capture market share. So from a large cap perspective, we're looking at players which continue to kind of gain and get ahead of the market share perspective.
Okay, all right. Hi, Prashant. I recall in February as well, you had made that point, right? With regard to cement looking up in India, and you all were positive, and it seems that's playing out because the worst of the earnings appears behind. But Prashant, if you could comment on this, since US as well as China, they managed to sneak in that temporary trade deal. The fear here in India is, they jumped the line. Everyone is expecting India actually to get a deal with the United States going. Do you think in that sort of a backdrop, could China again return to being the preferred market? Because we saw China outperform. Then India in the last couple of months were beginning to outperform and flows were coming back to India. Your comment on how the situation is panning out within the emerging markets.
Sure. So I guess the difference between China and India is they have very different valuation multiples, right? So the China trade, I think things are moving from pretty bad the last few years to less worse. And things are marginally improving across the board. You see it in earnings as well. With regards to the trade deal, I think, India is still pretty much out there. We have the Commerce Minister. I think he's going to be here tomorrow in US to discuss. And I think we are close to wrapping it up from India's perspective. So I don't think India needs to worry about the backdrop with China. I think with China, their national security concerns, their big picture concerns as well that US has. And with India being in the neighborhood it is, I think it makes sense for the two democracies to kind of pencil in this trade deal finally.
Prashant, hi. India often enjoys the Tina factor. There is no alternative. I don't know if you could hear, I was reading out the latest Jefferies call just before we started this interview with you, and they're exactly referring to that because earnings have been a little sluggish. But if there is no alternative, then India tends to benefit thanks to flows. What is your sense on the market here right now? I mean, are you worried about Indian earnings? Would you be willing to pay 22, 23 times because there is no alternative?
I think, there are pockets like, China, I think is doing okay on a relative basis as well. And I think for the emerging market asset class, if you look at if both India and China do well, actually it's great for the asset class. So one thing we talk about is if both engines are firing, it leads to more flows, more allocations. And one thing this year has taught us is that, everyone had given up on emerging markets as an asset class, but it has come back and it's actually outperforming the US markets itself. So people are paying heed to that. I think Warren Buffett also mentioned in his final letter that there could be scenarios where you would want to own different currencies outside of the US dollar. So I think a lot of that is playing into the mind of global asset allocators. And everybody has been plowing into the same stocks in US for so long. I think it's time to kind of diversify. So I think both if India and China do well, it's actually positive for the asset class and it's positive for India as well.
Okay, all right. Prashant, thank you very much. Good conversation as always, and we'll leave you to it. Have a good day. Or rather, I should say, have a good night's sleep, and we'll talk again. Thank you.